Hey guys, welcome back to Forever After Financial. Again, if you guys are like new to this, I'm still a beginner. I thought this was just fun just to go over for other new like dividend, if that's what you want to get into is dividends. This is like me giving back to other beginners and seeing like what I'm doing and seeing the progression throughout the years. This is I think my third video, and this is my first one since the beginning of January. So some of my numbers have changed, and so I just kind of wanted to go over them and talk about some of the stocks that I'm going more into, less into, things like that, and see if you guys will follow suit or whatever. This is just advice because obviously I'm not a financial advisor or anything like that, but I'm just giving my 2 cents, and you guys can do whatever you want with that. So as you can see now, I do have over $1,000 in my portfolio. I don't know what it was last time. I think it was maybe around like 600 or so. I haven't really been putting as much into it lately, but I'm going to start. If you guys want to pause through some of my stocks and what I have percentage-wise into each stocks, obviously I'm going to have to change this now because I did just go through all of my stocks that I have, and I'll do the equation and I'll show it to you guys in just 1 second. But as you can see, this is what the percentages I have in each of my stocks. I have a total of 17 stocks in my portfolio, and you can see what I have, how much I have into it, things like that. Again, I'm going to be changing this and talking about some of the ones I'm going into. Now I'm clicking on this. As you can see, this whole F, these are all the stocks that I have, and then also in column G, this is the price that is, this is how much you have to have of that stock to receive $100 a month, or $1,200 for the whole year in dividend income. As you can see, there are some really low ones, as Orchid Island Capital is extremely low. I'm a young investor, so I don't mind taking, well actually I prefer the riskier approach because I've got time to do whatever I want. I'm still super young. So there's that. As you see, this number over here, this was the total amount that I had in stocks like in January whenever I did this. This is how much I had accumulated for the $100 a month for every stock, or again right there's my per year for $100 per, you know what I'm trying to say. I hope you guys can hear what I'm trying to say. And things have changed now. This is the total that I just came up with. Again, I just redid all of this stuff right before I started recording, so this is up to date of March 8th. This is how much you have to have of each stock to receive $100 per month of dividend income. So as you can see, obviously this is there. There's some things that I'm probably going to end up selling because again, I'm more riskier. Like the safer bet stuff, like some of them is okay, some of it's not okay. Like, well, again, some of the winners that I have in here, like Verizon has done really well compared to what it was in January. The price has shrunk a lot more, which is great because then obviously you get there a lot cheaper and still make the same amount of money. So that's awesome. Also had Medical Property Trust Inc. They keep having dividend bumps, which is awesome. And plus it's in the medical field, so everything's going on with COVID and everything. This is to my knowledge a great stock. Again, I'm not super in depth with stocks. I don't actually keep up with everything that's going around financially with them. I just try to keep up with what their stock price is at and like what their dividend stuff's going at, and I just try to keep an eye on that. Nothing too crazy. I'm not too in depth with it, so take that with a grain of salt. Also, another winner is AGNC, which is, I need to actually bump up my portfolio percentage-wise with this because I'm pretty sure it's still pretty low. Same with BXMT, which is my fourth technically best stock, I guess you could say, or risky-wise to get the most bang for my buck. Also, had some big losers in here. As you can tell on the bottom, I've got two $50,000 ones, which I don't like seeing. So again, Wells Fargo is by far the biggest loser. It was not, I should have actually saved what it was whenever I did it back in January. It was not 57,000. Like, I know that. I'm pretty sure it was in like the high 20s or the low 30s. So this jumped up a whole lot. I'll probably end up selling Wells Fargo, even though it is, a massive company, it's a banking company, and obviously the stock price keeps on going up, but I don't exactly know what's going on of why that's so huge. But I'll probably end up selling that. Again, I'm more of a risky buyer, so obviously, like if I can't get the most bang from a buck, I'm probably not going to do it right now. It might change later in the future, but right now, I'm probably going to end up selling that. The JP Morgan was another loser. It's at 50,000 too. I'm probably not going to sell it yet, but I'm going to keep an eye on it over the next month or so to see what it's doing stock price wise, and what the dividend income is looking like, if it's going to increase the price or not. But right now that 50 is kind of scaring me. Also, another one that I'm going to keep my eye on is HPE, which is a Hewlett Packard Enterprise company. I do like it because, again, like it's a low price. It's $14 per share, and I don't know. It's kind of a low dividend income, but I'm going to keep my eye on that one too, just in case. That's my two of them, because I am going to sell Wells Fargo. I'm going to keep my eye on JP Morgan because it is getting pretty high, and just HPE just because 37 is still a pretty high number too. Also, I have like Cisco. It's a huge company. Triple M, a huge company. It's been the dividend price increase has been going on for like 50 years or something crazy, 30 some, 40 some, I don't know. But there's some really good ones to look into. Avi's been a really good one lately too. And again, these riskier ones, they've still held up over the past 2, 3, 4 months. So I'm going to keep them. Again, over here is the average stock price to equal out to be all these numbers right here. So 27 trying to be your medium. So anything below that is kind of in the risk, or not riskier, but I guess like the safer side is the more expensive side. If you're trying to get the most bang for your buck, this is not really the way to go. So again, this is just my take of it. And again, like I'm 26 years old, I'm riskier. I'm going to keep going with these. at&t one, that's everyone talks about that one. So obviously that's a great choice. You needed $17,000 in that stock to receive $100 per month, every month, or will equal out to be every month. I don't know if they pay monthly, quarterly, or anything like that, because I'm not too in depth with it. But yeah, there's a couple of them again to keep my eye on, and some again the winners like Verizon, MPW, and AGNC. Excuse me. Some of my winners, and the losers, Wells Fargo, HPE's a mini loss. I just got to keep my eye on it, and of course JP Morgan, which is above 50,000. So yep, I believe that's everything that I need to say in this video. You guys can let me know what you guys are looking into dividend wise, and you guys can let me know how it's been working out. Again, I'm still new. Like I created this account October 15th. I do believe, I guess that's what it says. So this is what I've been doing so far. I mean, the return so far has been 12%, $66 gain since I've started this account, and it's up $60 just from what I've put in from the stock prices going up. So numbers going to keep snowballing. It's awesome for me to see. And yeah, so again, like let me know what stocks you guys are looking into, what's been going good for you, and what have you been enjoying. And yeah, anyways guys, I will see you next time. Again, I am Forever After Financial, aka Nick, and I hope you guys have a good day.